This is Alan Bush with Archer Financial Services. Starting out with the stock index futures, we do have another update today with S&P futures making a 15-week high. Gains in the overnight trade were linked to better than expected German gross domestic product numbers, coming in up 0.3% against the guess of up 0.2%. And there were follow-through gains with the U.S. economic reports coming in stronger than expected. Retail sales and the PPI both better than the estimates. So this market seems to be on track for further gains as well in the longer term, as traders continue to believe that at some point down the road the Fed will come in with more accommodation. Our feeling is that they will add accommodation to the system probably later rather than sooner. In any event, this is a bullish influence for stock index futures that I think will support this market over the next few months at least. Over in the currency markets, some initial strength in the euro currency with the German GDP numbers coming in better. Also, we had French GDP numbers a little bit better than anticipated. However, we did see some negative investor expectations numbers in a survey that was released showing the fourth weekly negative number. So that causing the euro currency to come off of the highs. The Australian dollar and the Canadian dollar are supported by a flight to quality influence in light of the weakening economic conditions in the eurozone. We are seeing investors coming in interested in buying the sovereign debt of Australia and Canada. Countering this though, the weaker economic conditions globally, a negative on the Canadian and the Australian dollar. So I would stand aside in those for right now. Focusing though on the short side of the euro currency, we continue to believe that the majority of fundamentals, at least the fundamentals that are dominant, are aligned against the euro currency. So from here I would expect lower prices today with what we're seeing, lower prices longer term. Still looking for the 120 support in the euro currency to be taken out on the downside. And in the credit markets, a little pressure today. First with the German GDP numbers coming in stronger, that of course a bearish influence. And then we had the 7:30 U.S. economic reports better than anticipated, that also a bearish factor. But the ongoing dominant influences remain, such as turmoil in the Mideast, the weakening economic situation in the eurozone, all of which should support the credit markets. So from here today, I would look for at least a partial recovery. Longer term, still thinking that the main trend is higher across the board for the credit futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.